Hello, fellow traders. Welcome to another episode of live trading sessions. Today we're going to do or talk about the crossover setup, and for demonstration purposes I will show you an example of if you don't follow the strategy and you put on a bad trade and you don't cut your losses early, what is going to happen. This is a live account and I place just a wrong trade just to demonstrate. So just to go over the price action setup we talk about the other time, the best setups that we normally look for are the formations. You see, this is the WJ blue FX here. This is what we teach. You see the double formation, the W formation, double top, you see, and the M formation. So you can see every time you have this type of setup, that is what you are looking for. You put your trend line there and you take the sell trade, and your stop loss is not too far, maybe 50-60 pips. And how to calculate that? It you put the crosshair there, you see 50 or 60 pips, and you put your trend line there. So here is going to be about 112.675, and then look at how the market fell. So your risk is always small when you look at this setup, and your reward is big, because your profit target is always the next support level. When it breaks, you keep moving your stop losses and you trail this market, so you look at it that way, and it's the same thing here. So the WM formation or MW formation, I'm going to send you something on that to look for. And this is the Euro JPY trade I was talking about that we took based on price action. So when you put the price action setup, you can see I have all the setup here. When you put the price action setup there, this is the same thing you are looking for. You see, this has formed a cap. This has formed a cap. I'm just trying to look for if I could find something to write or to demonstrate, but I can use the crosshair. You see, this has formed a nice cap, and whenever there is a cap, that is the handle there. So you expect this next level to come to about 122.9 or even possibly 122.4. That is, and you can see the same cap form here, cap formation here, and that is the handle. So once the high, you put your stop loss there, the handle that came, and another cap is forming and the handle came. So here, if you were to put your trend line here, as I said, you were looking to sell this market, but your trend line, once the next daily chart candle closes above, because it didn't fail to test this, you can be a buyer here and take your profit here and be ready to sell for the reversal. And you can see the same. This is an M or formation here, so you are looking for that, and that is the reversal. So if you bought here, that is your stop loss. So you are just trading from, you are buying from the bottom, which is the resistance support, and your profit target is always resistance levels. And that is how you push all together with the crossover setup. So this is a new training video, so we're going to talk about the crossover setup first, so that any new student, that is the crossover setup. The previous thing was just something to explain, and that was the pound trade I called in the group. So you can see, based on this, that was why we took the sell trade, and we still have another formation to come, because this is an hourly chart. So, and according to the 4-hour chart, yeah, we should come down a little bit more. So that's what we're waiting for. So then, as we have, then let's go on to the crossover setup, because that is what we are talking about today. So the red line you see here is the 13 moving average, and the yellow line is the 30 moving average, and the green line is the 50 average, and the 200 is the moving average. This is one of the strongest setup, and the reason why is it shows you the big picture. So whenever price is below the blue line, which is the 200 MA, it tells you that the market is a strong downtrend. It tells you that the market is a strong downtrend. And what you do is, whenever you see, as you've seen here, price action setup is also coming in here, but whenever you see the red line, which is the 13 weighted average crossing the 50, the 30 weighted average, which is the yellow line like this, as you see here, that means that a sell trade has taken place. So when you see this live in trading session, as I'll be showing you, you need to take that sell trade, and the mark and your stop loss actually is just above here. So your stop loss is the risk you are willing to lose. So what it means is, you are saying, if this trade don't go down and it goes up, then you don't want to lose more than this. So your stop loss is small, your profit is good. And whenever you see the red line and the yellow line, which is the 30 and the 13 crossing the 30, and both of them crossing the 50, or one of them crossing the 50, that is still a valid sell trade for you to take, because the 50 is above, the 30 is below the 50, and the 13 is below the 30, and all of them are below the 200 MA. That is a strong downtrend. It's telling you that the trend is very, very strong. And it's even stronger when you see all the three. You see the first cross is here, the 13 crossing the 30, and both of them crossing the 50. So your first entry is here, your second entry is here, and when you see all the three crossing the 200 MA, it's just a confirmation that this downtrend is very, very strong. It's very, very strong. So when you take your first trade here, your stop loss is here. If you were to take that second entry where both of them cross the 50, your stop loss will be above here. And when you are taking that trade here also, your stop loss will be above here. Remember, when you enter the trade, you count 5 candles to place your stop loss on the sell trade. 1, 2, 3, 4, 5. So the highest of them, which is this, that is where normally your stop loss go. So this is what all you need to know about a sell trade, and you can use different time frame. Normally I like a trending market, so I like to use the daily time frame to take my trade and trend, which means that I don't have to do anything. I just have to manage the trade as every day closes until. So now let's go for a buy setup. Let's go for a buy setup. So you have a buy setup, which is the opposite of the sell setup. When you have the 13 crossing the 30, such that the 30 now is not above, as here the 30 is below the 13 and the 13 is above. So here, this is your first entry of your buy trade. As you can see, I am in a buy trade here. I use the price action and stuff combined, which I'll talk about, which is in 200, and one is 811 loss, and the one that is in 811 loss is just for demonstration purpose. Mind you, this is a live account, it's a funded account, it's just for demonstration purpose. That is why I took it. So I'm going to explain to you why you shouldn't make such mistake, and when you realize your trade is wrong, you should cut your losses quicker. So when the 13 MA crosses the 30 from below, remember, sell is from above, buy is from below. It means that the market is a buy. So your first entry is that where it crosses, and your stop loss the same, 5 candles, the lowest is your stop loss. And when both of them crosses the 50 here, that is telling you that the trend is strong. And even you have a more stronger trend when both of them crosses the 200 EMA, telling you that the market is very, very strong. And whenever you use the 1 minute or any time frame to take the trade from here, your first profit target, as you see, is the blue line EMA. Once price crosses above it, it means that it's going to go upper. So what I'm doing is, because I took this trade on 1 minute, now I'm looking at the 5 minutes now. So the 5 minutes, once the first cross has happened here, So your stop loss is here. So the first take profit is where I have put that is the red the blue line here. So that is from here. If you calculate, the market has about 150 points to go. So that is where I am looking to take the first take profit, 150 points above that. So that is your first take profit. So this is the buy, and when the 5 minutes also comes and close above here, I will wait for the pullback. So you see, when that cross happen, the market goes up and pulls back, then goes up again. Then I'm going to move into the 15 minutes, so that I'll wait for the 15 minutes also to come. And once the 15 minutes also, we have a buy set up here, and they cross the 50 to tell us that the trend is strong, the first take profit is always here. Here's 26840, that is the blue line. And when we finish, you can move on to the 30 minutes chart, and you can see if the rules of engagement are met here and the buy is confirmed here and is confirmed as strong, that is the first take profit here as well. And the same, you move on to the 1 hour chart, is the same. Once the rules of engagement are met and the buy is confirmed, your first take profit will always be the blue setup. And it's the same for the 4 hour, but the 4 hour hasn't actually happened. So once the 4 hour sell is confirmed on the green line here, or the same, your first take profit will be here. That will be 26181. And it's the same here. As you see the sell here, your first take profit is always the blue line when you have your sell there. And if your buy is confirmed, always the first take profit when your buy is confirmed above, it will be the next resistance level. And if price closes above that, you move to the next resistance level. Remember, I spoke about resistance level is price previous places that price have gone. So if market keep going up, that means that it's going to try to come and test the previous high that it has been, and the previous high, which is the previous resistance all-time high set, is here. That is why where you put your trend line. So for those taking new students who are taking this course and watching the videos, I will come to you and we'll go over it, and you understand when you do the price action. So I'm just combining everything. So this is a daily setup. As you can see, our first rules of engagement, as the price action was met here and that was confirmed here, when the red cross below, we take the trade and our stop loss here, and we have a second entry here, and you have a third entry here, daily chart, and you go. And this is the first reversal point, which tells you that take your profit and run away. And then when you take your profit and you don't even go in for a buy here, you have your first buy entry here. Remember, when the 13 crosses the 30 from here, and then you have your second buy point from here. So this is what we are doing, and this is what I wanted to tell you about. This was a trade which was clearly a downtrend, and I just took a buy instead of a sell, just to demonstrate to you that whenever you see that you make mistakes. Mistakes are bound. If you don't make mistake, you will not learn. But whenever you see that you have made a mistake, the market was a sell trade and you took the opposite trade, which is a buy. Once you realize it, you have to cut your losses quickly and jump on the right trade. Other than that, this is the results you are going to meet. This is the results you are going to meet. You are going to be in a deeper loss. So you always have to analyze your market. That is why I'm not a genius. Practice and practice and practice and practice. And once you practice and you keep practicing, you are going to be perfect. I'm here to guide you. It's a one-time fee. Once you pay the fee for 10 whatever years, I'm not going to charge you anything. It's just going to be chatting time, more chatting time with my guidance, giving you more assignment and checking for you whether you are doing the right thing. That is all I'm going to do. So you see your sell. Let's move on to the currencies and you see what I'm talking about. It's the same thing here. This is a 15 minutes chart, and you can see your first rule of engagement was here, and if you took the sell here, which occurred here, your stop loss is here, and this setup, W setup, is telling you the market is reversing, so you get your profit. You can see this is an inverted cap and handle, the pattern formations that you look for. So once you see this pattern forming, your trend line is here. That gives you a double top as well. So that is the handle that is forming. But then you have your cross to tell you the buy and the second and the third. And you can see here also the buy was here. If you go through here back a little bit, you see the pattern that is forming. The buy was here, and that is where you get up. You can see the formation clearly here, telling you the market is above to return. If you didn't pay hit, you have your confirmation for sell here. So if you bought here, you take your profit here. Once you see this, you get away. Remember, trend is the basis of all profit, and trend comes along as a result of time. That is why I like the daily time frame or the 4-hour time frame or the weekly time frame to trade. What it means is that it means once I have my buy here, I don't have to do anything for several days. All I need to do is managing my trade and moving my stop losses and locking in my profit. Once I have my sell confirmation from here, I don't have to do anything for several days. So I have to just trail the market as the trend is developing and re-entering position as I get more confirmation. And here the consolidation here telling me the market is above to reverse upwards. I take my profit here and wait for an entry, and my stop loss will be rightly placed. And if we look at more examples, this is price action, so I'm not I'll change the price action to the setup that we are doing. And as you can see, that is the same 15 minutes chart here. Look at the pattern, that is an inverted cap and handle, the pattern information, your buy entry first one here, your second one here, you take your profits over there, and it's telling you more to go in for a buy. This is 15 minutes chart, so you are still in the game. If you like to trade, day trading means that you are not going to work and you are sitting down trading at home. So you trade from a shorter time frame, being it the 30 minutes, 1 hour, 15 minutes, whichever. But this setup is very powerful, so you can even use 5 minutes to trade. So you can see your sell entry here. Once you got your buy entry, you can see the pattern forming, telling you to get up, and you see your sell entry, and that is it. And you come down and you go. You can see the cap and handle, confirmation of a cross over all of them here, all the three crossing here to tell you a strong uptrend, and you go. If you move back to the 4-hour chart, you can see your sell trade was here and is below the blue line, so telling you that it's a strong downtrend. And when you have your buy here confirmation, your first take profit is there. And look at the pattern. Yes, so it's just practice, and you can see now the price action giving you the first level here of reversal. So now the first time it is coming is here. And when we talk about support and resistance on the price action, the way you see the support and resistance here as also those all the curves or the MAs, blue, green, all of them serve as support and resistance. So once that you have your rules of engagement, sell here, sell here, sell here, you can see prices are below them. So as long as price stays below them, also it's telling you the market is a downtrend, and you can see how prices are bouncing off them because they are set. Once prices are below them, they serve as a resistance. So you can see price tries to go about, it can't go, it's hit it and it's rejected, and it keeps falling and falling. And it is the same for the buy trade as well. You can see here the strong, once price, you have your rules of engagement met, you have your buy trade on the monthly. Look at how price is above them and is bouncing off the 13 and the 30 and the 50 EMA, because now they become a support because price is above it. So anytime price hit it, it's bouncing off it, telling you that it's still an uptrend. So that could be another potential entry for you to keep building positions. That is a monthly chart, and look at the weekly chart as well. Once you have the buy here, market is consolidation, but you have a good entry, so price keep bouncing off it, you see. And this is where you spot a fake trade as well. When you see or something like this happening, a strong sell coming, is bouncing off, you don't have any crossover, so this tells you that these are fake news bringing the market down. So after it's over, you can be a buyer here, you see. And this is also casing, so that is not a strong sell. You only have a sell here when the rules of engagement or your price action reversal formation is telling you as it is here. So if you are a buyer here, this is where you go out of your profit, the market, and you can sell here and also get out from here and buy here again and ride it. So you have to take notes of this. And let me go on and show you the I have the another formation, not this one. This is a new different setup we'll talk about, not this one. There is the 2 EMA setup as well. Hold on, let me remove something. Okay, no, I'll show you. Hold on. So if you need to bring any chart, remember, is putting your indicator here and bring in the chart, then you do the setup. So hold on, I'm going to do there is another crossover setup which I will be pitching it with Ichimoku. So that is the 9-day exponential. So let me do it, then I will do the 18, okay, which is the same thing. It's the same setup I'm bringing, and you have the distance here. And what am I doing here? Once that is done, I have the grade, and I have the properties, and this is the bear candle is always red. We have bull candle always green. I have bear that was red, and yes, okay. So when we say a bull candle, that means that the market is going up. That is when you want to buy. You buy when the market is going up. And when we say a bear candle is when the market is going down. When the market is going down. So a bullish, you hear these jargons, bullish, or a buy candle, a bear market, the market is coming down. A bull candle, it means the market is going up, and in the bull candle you buy, in the bear candle we sell. So this is just a similar one to the ones we've been studying. You want to be a buyer when the 9-day moving average, which is 9-day moving average crosses the 18-day moving average. That is it. 9-day moving average crossing the 18 moving average, the same. You buy here and you put your stop loss here. I can even show you a bigger picture by adding the 200 to show you a bigger picture. Okay, so if I'm going to add the 200, let me make that yellow so that you have a bigger picture to tell you that you are in a bull market or you are in a bear market. And I'm going to save the template again. I'm going to save it. Yes. So you can do that as well to tell you the market, what is the state of the market. And that is the daily candle here. So you can see once your rules of engagement are met here, it's telling you now the market is downtrend, so you look for the sell here. And when you come to 15 minutes, it's the same thing there. So you can change the template to find out what is really happening as well. It's the same candle. The reason I'm teaching this is I'm going to combine this later with another setup, and you will see how it's work. So it's the same thing. When the 9 crosses the 18 from above, as you see here, you look for a sell trade, and that is your stop loss. And when you have here, that is a buy trade, and you look for a stop loss. So that is it. This is a sell trade. Your stop loss is here, and remember that is a resistance area as well. And when you have the trade here, that is you buying, and your stop loss is somewhere here, and your first take profit is here, and you have the sell here, and your take profit is here. Remember, when you see these pins, these are stop hands. It's also an indication telling you that the market is about to reverse. So once you are in a trade and you see that on the second pin, you should try to get out and look for a possible reversal. So this is all we're doing, and that is example of a live trade on this session that I'm showing you here. So we are waiting to find the market to see whether you have more momentum, and you also know if you have more volume or momentum in the trade when the candles are bigger. When the candles are smaller, like you see here, that indicates a consolidation phase of the market. So you don't actually, a trader, you don't have to trade. Wait for the consolidation to finish, and it will give you the direction. And in this one, the direction was a downtrend. So like I was telling you, be careful when you enter a wrong trade. Don't worry, mistakes are bound to be made. Make sure that you know that you've entered a wrong trade, and once you realize your mistake, get out of the trade immediately. Do this over and over and over again, and once you do this, you come to me, watch the videos are there. You are going to watch it over and practice over and keep practicing, and you're going to come back to me with all your questions, and I'll come back to you, and I'm going to answer your questions and give you more assignments. Try to at least study your chart 1 hour every day. If you can have more time, use more time, practice it, and look for trades and place your trades on the demo account that we will set up for you, and practice all the time frames. These are all the different time frames: monthly, weekly, daily, 1 hour, 4 hour. If you want to see what is happening live, try to start from the market, the 1 minute chart. You see the buy happening live. Then you can move to the 5 minute chart. You see the buy happening live, and you can place your trade. Once the market, you have the buy condition, and you put your stop loss at the right place. And then you can try on the 15 minutes chart. The buy is about to happen. So once you have the buy happen here, the first take profit is this resistance here, and once all of them crosses this, then that is the first take profit coming here, 26838. So always just keep practicing. Practice makes man perfect, and when you practice, in a few time you are going to also be an expert in what you do. And I'm here to guide you. This is the mentoring, one of the best around there, because nobody does what I do. I've been with people for over 6, 7, 8, 9 years, and we are family now. It's a family. Once you get not you are family, because we don't leave you behind. I'm here to encourage you. I'm here to push you so that you can also move and try to establish an income in the financial industry. It is the same setup you are going to use to trade stock. If you want to trade stock, let me just bring the Apple chart for you to see. If you want to trade stock, is the same strategy. You'll be using it to trade your stocks. This is different from value investing. If you want to buy stocks and hold, it goes beyond fund. This is technical analysis. you have to do a fundamental analysis of the company, looking at their financial situation. But if you just want to trade stocks for income, monthly, weekly, a few couple of months, the setup is the same. Whether the price action or whatever you are using is the same for them. You can see this is Cisco. Let's look at the Cisco chart. Yeah, you can see it's the same thing here, whether you go to the 4 hours or the daily. So you have a sell here, and you have your stop loss here around 48, and you have a sell around 47, and you drove all the way to 32. So you gaining more than $10 per share here, you see. So that is a lot of money, and you get out. It's the same if you come to Caterpillar. Look at Caterpillar here. It's the same here. Yep, Caterpillar, the daily chart, you can see. Yep, you have your sell here, your rules of engagement sell here, your stop loss here around 146, and look at how Caterpillar dropped to 89. That is a lot of money, you see. So it's we can go on and go on and go on, and you can see almighty Google is here. Google chart is here. Bring the setup. It doesn't matter whatever setup you bring, you get the same results. So this is it, whether you are using price action. Let's look at the yeah, you can see the sell took place here. Your stop loss is around 1,525. Your entry is 1,516. Look at how it dropped to about 900. So you have more than $150 dollar per share. So if your account is deep enough and you bought, let's say, 500 Google shares times more than almost two or more than $200 dollar per share, that's a lot of money for you. And look at your buy confirmation here. 1,140 first buy confirmation, second buy 1,242. You have another entry 1,249. Look at where it is now, 1,570. And this is what you have to understand when a company, when you are doing a value investing in stocks, when company fundamentals are stronger and the company drops, this drop was not because Caterpillar was bad, it's because of the pandemic. So this is a discount. So once the market drop, you always, it's a discount that is giving you, those who like to do value investing. So if you love Google shares, then you buy more at the discount, and look, you see, because when it recovers, it always goes up higher than it was, and it might even go up more. Okay, it might even go up more. It's going to, this is a cap formation. So now, as price action, there will be a small correction here, and once the correction finish, it will keep pushing higher, or maybe they might do a stock split. So you can see from the monthly chart. So this is value investing, incorporating technical analysis with fundamental analysis, and you are okay to go. So we can do more examples on the stocks. This is GE chart as well. So that is what is happening here in GE. You can see when you have your buy here and you have a gap, this is, we'll talk about gaps, this is a breakaway gap. So if you entered your buy here and you have your second entry here, when the market opened on previous days, you see from 9 and 913, 977, that is more than 50 or 45 cents gain. So that is a breakaway gap. So you have your buy entry around 863. The market came all the way to 1317 before you have your signals to get up. You can see all this here. This is a small sell-off here, but your market is above here, and look at it, how it's bouncing the resistance of the 50 EMA. So that is it, and you have another buy here, and you go in. So it doesn't matter which chart you are looking at, whether you are looking at currencies, whether you are looking at commodity like oil. Let me see, oil. whether you are looking at commodity like oil or whether you are looking at commodity like gold. So this is oil here. Once we stay above here, your target is 47. Or when you're looking at gold, which I call that bull market. If you watch the video on YouTube the other time, I did a very pretty good analysis from the price action when the yellow metal was around 1812. I said if price break around above 1817, which was around somewhere here, and hold, let me bring the price action for you to see. I did a very good breakdown of this trade the other time. I said if price closes above the 1817 level, which was somewhere here, then you're going to go up more, and it's pushing up more. And now we'll wait until you have the signal to tell you that we should get out of this market. That is where we're going to get out. I think I've passed a lot of very good information. Price action video is there. I'm just trying to put it in just to do an explanation. So I've done 2 setups here for the new trainers. I'm going to do another setup, the last setup, then I'm going to do introduction to trading, which I'll talk about forex, and I'll talk about stocks, the difference between them, why you should be a trader and why you should learn hard. Everyone wants to be a beast until it's times to do the work. Put in the work, and you're going to be successful. I'm here to guide you. Until another time, I will say have a good trading day. Thank you very much, and stay safe.